Okay, hello everybody. Welcome to Korean Atlanta Mentorship. And in this video, we're just going to do a velocity banking review. But before we get started, let me flex for the 10,000th time of my mortgage paid off in 2 years and 9 months, right? 2 years and 9 months. And you take a look here, this was actually in July 29, 2024. Mortgage is paid off, and my you see this maturity date right here, that's like the 30th, or I'm sorry, the last payment of the 30-year mortgage. And so if you just subtract 30 years and you see like, oh, November 1st, 2021, that's the first payment. So if you do the calculation, paid off in 2 years and 9 months. And you know what, we all know it's crazy. You all know something? I can't relate with the average person anymore. I can't. Like the moment I step outside, I see the average person, they look like they're miserable and they're about to explode. You ever notice that? Oh my goodness, I notice that all the time. That's why I just like to sleep in, kinda like Garfield. In fact, I actually took like a 4-hour nap right now, and my back hurts. I don't know why, but my back hurts. So, I got rich people problems, okay? And so, yeah, and I'm gonna tell you something, every time I look at, like, the news and social media, it's like, "Bro, everybody's broke." 18 million Americans are house poor, and this was from 2024. And sometimes I watch like these compilation videos. I like Jack Morgan RLP. I don't know how he finds all these videos and compiles them of people just uploading on social media how they're broke. Everybody is broke in 2025. We got to react to this, right? Well, I'll do another reaction another time, but it's like a reaction to reaction. Being broke in 2025 hits different. Everybody's broke, except for me, and except for you too, because you're watching this video, right? You're learning about how to pay off debt. And if you didn't know anything about like the 30-year mortgage, I'm going to tell you this. Just go on Google, mortgage amortization. That's all you got to do. Mortgage amortization, okay? And most people just don't know this, that a 6% mortgage, the loan interest is more than the loan amount, and you're gonna have to pay like double the house. Okay. People don't know this. They're like, oh, I could just afford the monthly payment. And then they don't realize they're paying double the house. And then you wonder, how do those banks, how they got the tallest buildings in North America? You know what I mean? And that's why you got to pay the sucker off early, because who wants to pay more than 100% interest on a loan? Okay. No, nobody does. And when you pay off a mortgage this quickly, like me, okay, like me, you're going to be like Homer Simpson when he tells other people that he went to space, okay? This literally happens to me every time I tell other people that I paid off my mortgage in 2 years and 9 months. I can't relate with them. "Oh, you're struggling?" Not me, I just don't pay for the most expensive payment that most people have, which is their housing, right? And actually, let me take a look here. Homer Simpson, right? Remember this? Remember this? Yeah, The Simpsons. And he's telling his coworker he went to space.
Oh, and here's a picture of me in outer space.
You went into outer space. You.
Sure. You've never been?
That's me. I just tell other people, yeah, yeah, I just paid off my mortgage in 2 years and 9 months. And, I don't think they actually fully process it. You know what I mean? Like, what? And then maybe they try to change the subject. In fact, before we get started, because I do the same velocity banking review over and over again, and people complain like, "Oh my goodness, you just do the same thing over and over again." And yeah, that's why I'm so good. That's why I'm so good. Because I'm like Bruce Lee. I like the Bruce Lee of this crap. But let me go ahead and ask Chat GPT this. Okay. Okay. And I think I've done this before. Yeah, let's ask Chat GPT. Why is it when I tell people in real life that I paid my mortgage in 2 years and 9 months, they act like they didn't hear me when I know they heard me? Okay, let's see what we get. Their brain almost rejects it, right? Like you can't, right? I mean, you live in a world where people are like this, so of course, And again, I want my fellow human being to win, but at the same time, it's kind of hard because most people, I don't even know a better way to say this, are stuck in the matrix, unfortunately, right? But let's go ahead and play this.
People often react that way because what you did is so far outside their frame of reference that their brain almost rejects it. Paying off a mortgage in under 3 years contradicts everything they've been conditioned to believe about debt, home ownership, and financial freedom. Here are a few reasons why they might act like they didn't hear you. 1. Cognitive dissonance. Your success challenges their belief that a mortgage has to take 15 to 30 years. Instead of engaging, their mind shuts it down as if they didn't hear it. 2. Envy or discomfort. Some people might feel insecure or even envious, so ignoring is a defense mechanism. 3. Skepticism. It sounds too good to be true, so they assume there's a catch and avoid addressing it. 4. Lack of understanding. They might not know what to ask or how to process it, so they pretend it didn't happen. 5. Fear of change. If they acknowledge your success, they might have to confront their own financial choices. It's similar to how people reacted to your Velocity banking presentation. Some are shocked, some are skeptical, and some just don't want to deal with the implications. Have you noticed any exceptions? People who do engage with it?
No, I've actually never. I just kind of casually mention it, and then sometimes I've already talked about velocity banking to those people. Notice how I'm using the term "those people," right? No, I don't. I don't mean to say it that way. Those people who didn't go to space, who didn't pay off their mortgage in 2 years and 9 months. Oh, it's those people. No, I'm just kidding. Yeah. So yeah, this is just kind of what happens to me. So a lot of times people, people think like, oh man, if I'm debt free, everybody's gonna like admire me. No, they're stuck in the matrix. It's like you tell them that their brain is like short circuiting. Oh my goodness. I want to stay in the matrix, right? All right. I haven't even done the velocity banking presentation, but let's just get to it, guys and gals, and whatever you want to call yourself these days. All right. So, what is velocity banking? All it is a debt payoff strategy where you throw all of your money into debt with the help of a line of credit. And actually, let's just make this a little bit simpler, right? So, I've been using this, what I would call a nursing income, and I get not everybody's a nurse, but here's the other thing too. You got a mortgage? 90% of people in this country don't even qualify for one. I don't know if you knew that or not, but 90% of people in this country don't qualify for a mortgage. Isn't that mind blowing? So let's just kind of make this quote more realistic because people complain about that. Although I don't know. Let's just do this. I'll take these two payments out, right? These two credit card payments out, and then I'll take an auto loan out, and let's go ahead and do this. And all right, so let's go ahead and modify. You're seeing me real time making a velocity banking scenario. So I'll put $5,700 of income. Although I don't know if you ever heard the saying that it's actually easier to make more money in an instant than like save money over a long period of time. I don't know if you ever heard that. That's why I don't even know how to explain it, but I've heard Myron Golden say this a lot, and I think that's true. So like if you're broke and poor, I actually think you're probably going to have a much higher chance of being a millionaire than someone who's like has a nurse's income because, if you have a nurse's income, then you're way too comfortable where you are. So you ain't going to hustle and do whatever it is that you need in order to make Z money, right? So let me go ahead and actually, hold on, I screwed up. Let me do this. I'm going to copy this and then I'm going to do this. Okay. And then I'm going to delete this. All right. So we got 3 loans here. And believe it or not, I just do this all real time. I'm so good. I'm so good that I'm just kidding. Like, there's that Bruce Lee quote: "If I tell you I'm good, I'm boasting. But if I tell you I'm no good, you know that I'm lying." I'm just gonna tell you I'm no good, right? The Bruce Lee quote. What is this? Like a Bruce Lee podcast disguised as velocity banking? Might be. It might be. In fact, I think there was a Bruce Lee podcast. I don't by Bruce's daughter Shannon. Let me just do this. Bruce Lee podcast. Okay. Bruce Lee podcast. Let me see. Oh yeah, it's Shannon Lee. Shannon Lee. How many of the Bruce Lee podcasts are there? What was it? Actually, let me just do this. Reset. Oh, it's been 6 months since it posted. Okay. Okay. But how many podcasts? 33 episodes. Got it. Man, he looks pretty cool with the mustache. I think I don't know. Man, it's crazy. It's crazy. Bruce has been dead since like the 70s. Was it the 70s? And we're still talking about it. That's how you know you're an icon status, right? If we're still talking about you and on YouTube and you have no idea what YouTube even is because you passed away that long ago. All right. So let's go ahead and do this and pay off our debt quickly. And all right, so let's go ahead and I think we got it. So it's going to be B8 to B13. So first step of doing velocity banking is the budget, right? That's the first step of velocity banking. And we have our income, we have our expenses, and then we have to have an expense breakdown, right? List every single debt that we have, all of them. We got to list all of them, right? Because this is a debt payoff strategy. And then our food, gas, insurance, and all that other good stuff, or we could call it crap. I don't know. Like, that's my favorite word for today. We'll just call it crap. All the other crap, we put here. This is our non-debt items, right? Everything that's a debt, that's its own separate item, and we're going to make sure that these all go to zero, okay? And so what we're going to do with velocity banking is we're going to have the same income and expenses and change the flow of money, okay? Flow of money. Where does the money go, right? And one of the things that is really important with our flow of money is that we're not going to save it, okay? Not going to save it. So if you take a look here, in my checking account, anytime money comes in, okay, it's going to be zero. That's the flow of money because it's just as soon as it comes in, it's just going to go right on out, right? And look at me casually just pointing to 19 grand. Like, oh yeah, anybody, it's like going to space, right? Going to space. Me casually pointing it out. You've never been, right? Pay off my mortgage in 2 years and 9 months. You didn't do that? Oh, you've never been to space. Okay. That's gonna be my new tagline. You've never been to space? You didn't pay off your mortgage in 2 years and 9 months. Okay. Okay. Well, you should do it sometimes because it might be pretty good for you. All right. So now let's go ahead and do this, which is our cash flow. We're gonna have an idea called cash flow, and this is basically the amount that our debt gets reduced. And you might be, hey, if you're new to this channel, you might be like, hold on. Isn't that the same as our savings? I don't get what you're talking about because we haven't done the final step yet, which is get a line of credit. Or actually, we're not going to get a line of credit step, and I'll tell you why. But we're going to move some debt into a line of credit, and then we're going to throw all of our income in there. Okay, all of our income in there. So, okay, what do we need to do this final step? Well, we obviously need a line of credit. A line of credit. And let's assume that we have access to $60,000. So, what's a line of credit? All it is a financial tool where you could borrow money, pay back, and then use it over and over again. So, if you take a look here, this is my home equity line of credit, right? Home equity line of credit. If you've never heard of it, and some people haven't, right? I know that if you're in this space, you probably know this, but a lot of people don't. Home equity line of credit. All that means, okay, home equity line of credit is that you offer your home equity as collateral. So what's home equity? It's the amount that you owe on your home, or I'm sorry, it's the estimated value of your home minus how much you owe on it. That's what home equity is, and you offer it as collateral to the banks. They'll lend you a line of credit as like a credit card, right? So basically, you got this huge credit card because you own an asset called a home, and mine's $280,000. So what does that mean? I literally click a button. I literally click a button and I can dump up to $280,000 in my checking account and borrow it for me at a 7.5% interest rate. Some people got 8, some people got 9. I've had 2 home equity lines of credit where I was being charged a 9 to 10% interest rate. And even when I did 9 to 10%, it was like no big deal. People freak out about that. People are freaking out about 6% to 7% interest rates. I don't even care about that. No, I'll show you why. But let's assume we have an 8% interest rate. 8%, okay? Now, what's the easiest way to figure out which debts we should move into that line of credit, okay? Well, I like to use what I call the cash flow index, right? Cash flow index. And if you don't know what the cash flow index is, it's a system created by a dude named Garrett Gunderson. Garrett Gunderson of the Wealth Factory. And all it means is it spits out a number and it's like a ranking system, right? The lower the number, that's the one you want to pay off because it gives you the most cash flow for paying off a debt, right? Cash flow index. In fact, Garrett Gunderson, right? This dude. If you want to know something, this guy is actually an instructor for Renatus, right? Renatus. This is where I learned all this. I'll say crap, right? Wealth acceleration, Garrett Gunderson. Garrett Gunderson, okay? That's where I learned this from. So, yeah, let's go ahead. Oh, Bruce Lee didn't know what the cash flow index was, unfortunately, but he's cool enough in my books. In fact, how many movies did he make? Only 3 or 4, and then he died? But he had a bunch of Hong Kong movies that where the dubbing was really bad. I need to watch those movies because they're iconic too. All right, so let's go back here. Let's go back here. So cash flow index, all it is just a arbitrary number of a statement balance divided by the monthly payment, 1137.5, right? And then this is going to be the same thing, 000 divided by 487.5. And luckily, I got this auto calculating on these loans, right? So I just got to copy and paste. So I'm going to go ahead and do that. Copy and paste. And then you see right here, okay, and this is 90.07, that these are the lowest ones. Now, the interest rate does affect it, but it's not the only thing that affects the cash flow index number, right? Because it has an influence on the payment amount. So, but in general, okay, credit cards and the short-term high interest buy now pay later loans have the the lowest cash flow index, meaning we pay this off, we get a lot of bang for our buck. Because think about it. I paid 35 grand. I pay it off. I get over $1,000 of cash flow back in my life. Whereas if I focus on paying off the mortgage, I only get $927 back in my life, right? 220,000 to get $927. What a joke. I ain't doing that. So we're going to focus on these two first. Okay. And how much is that, right? It's 35. I think that's 35, 15. Let me sum it up. Is that 50,000? All right, so we're going to move $50,000 of debt into the line of credit. Now, here's going to be the caveat, right? If you're broke like this, broke is a joke, nobody's going to give you a free and clear line of credit. Nobody. Why? Because banks don't lend money to people who need it. I don't know if you knew that or not. There's a reason why only 10%, like 90% of the people in this country can't get a mortgage because they need money, right? So there's a 10% that the bank targets. They say, whoa, you don't need money, so let's get you a mortgage so we can get into a home, right? That's the bank's mentality. And so, a lot of people, like, they don't understand how banking works, so they think like, oh, if I need money, I'm literally going to go to a bank. That is the worst way you can manage your money and cash flow and deal with banks, right? And that's why I have over $575,000 in lines of credit. I think it's 579. I don't even care. I got a new business credit card a couple of days ago. New. It's from US Bank, okay? $3,000. I have over $579,000 in total. Why? Because I'm that awesome. No, actually, it's not that. It's because I don't need money. And banks don't lend money to people who need it. That's how it works. Like, don't hate. Like, you just gotta understand the game. See, most people they don't want to understand the game, and that's why they're broke. You gotta understand the game. No one. It's like going to Home Depot, right? Do you think the average person who goes to Home Depot knows how to use all the tools in Home Depot? Probably not. They just get a light bulb and leave. If you're like me, right? Learn how to go into the Home Depot and learn about the tools. Now, what's funny is that Home Depot, even though they sell the tools, they'll never tell you how to use it. It's kind of like the bank. The bank just sells the tools. They sell the HELOC, they sell the loan, they sell all that, and then they never tell you how to use it correctly. Okay. Well, or the velocity banking way. And that's why if you go into a bank and you're like, I want to do velocity banking, they're like, what the F are you talking about? Right? Because they don't, velocity banking is about how you redirect your money. They don't really care about, actually, they kind of do care if you pay them off too early. If everybody pays the bank off too early, then they'll be screwed, right? But luckily, you're just going to be unrelatable when you pay them off too quickly, like going to space. You never been. All right, so let's go ahead and move these credit cards, $50,000, and guess what happens here? Oh my goodness, these two payments go to zero. Mind blowing. How do we go from $279 to $1,900 of cash flow. Must be a scam. Anyways, so now the final step is you put your entire paycheck into the line of credit, this entire $5,700, and then you take your expenses out, and then you rinse and repeat over and over again, and the balance goes down by $1,900. So whatever you got to pay for, your other debts, your food, gas, insurance, you just take it out of the line of credit. And not only that, I'd still use a credit card, because I use a credit card to pay off the food, gas, insurance, and then you just pay it off every statement balance, and then you won't pay anything. You might get some points, right? So delay the interest by a month by using both a home equity line of credit and a credit card. Because the downside of a line of credit is that you accrue interest the moment that you're using it, right? So let's go ahead and do this and do the quote complicated math that everybody is very fascinated by. So G2 plus H2 minus, what's our cash flow? It is 1904.55, right? So to get the next month's balance, you add up these two, previous month's balance, interest, and then you subtract your cash flow. And then what we do is we got to calculate the interest. We based on the average daily balance, multiply by the interest rate, and then you divide by 12, okay? Divide by 12. And then let's see how long it takes for us to pay off literally the $50,000 of credit card debt. All right, so now, and then this is going to be right here, 29 months, right? 29 months. Okay, so 29 months, and then this is going to be 50K of debt. Woo, that's like a little bit more than 2 years, right? And I don't know if you ever watched on YouTube, and actually, let me just do a quick search. Hold on. Let's go ahead. Pay off credit card debt. Okay. Pay off credit card debt. Ooh, who's that? Ooh, who's that? 60,000 is a big deal to the average person, right? Like, I don't know if you knew what the average credit card debt in this country is, only like $7,000. And we paid off 50,000. People are freaking out about that. And actually $10,000, right? Look how much views just paying off $10,000 gets in YouTube. In fact, 10,000 in 3 months, actually, that's pretty good. It's actually pretty good. So, yeah. Look at this one. Paid off $10,000 in 6 months, 400,000 views. And so when people see, actually not this one, see this, actually, if you paid off $10,000 in 6 months, that's actually really, really good. It's actually really good. So 10, 20, yeah, that's really good. All right. Actually, I'm thinking about, now that I'm doing the math in my head right now. Quick math, I can't even, but I can't even like compare if this is like the same trajectory or not. But here's the moral of the story. Throw all of your money into debt and you'll achieve results. Okay. All right. So let me go ahead and do these loans. And luckily we got the loan calculators for this. So I just got to type in the month. So 29, 29, 29. Okay. And then, so it's auto loan, student, mortgage, blah, 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 blah. And here's the thing about the 30-year mortgage. You got to pay it off last, right? You got to pay it off last. I've done demonstrations on YouTube where if you don't pay it off last, okay, if you don't pay it off last, then you'll be like struggling, right? Because this is a cash flow game and we want to get as much cash flow as possible in our life to pay off our other debts. So it's like a huge snowball, right? Kind of like the snowball method, but not really. Okay, so let me just kind of go here and then look at this one. It's the lowest cash flow index. So I pay off 10 grand, I get $360 back in my life. All right, so let's go ahead and do that. So even though this is at a 4% interest rate, this loan, we're literally moving a 4% loan, 4% loan into a 8% line of credit, okay? And we're going to get the most cash flow back. So plus 10830.98. And then let's increase the auto loan, 0. And so now we're at $2,000 of cash flow. $2,000. $2,000. All right, so I'm going to go ahead and do that. And this is going to be 2272.88. And let's figure out how long it takes us to pay off the auto loan. All right, so we'll do that. And it's 1, 2, 3, 4, about 5 months. 5 months to pay off the auto loan. Okay. So was that 34 months? I can't remember anymore. 34 months. So 34 months. And then this is going to be how much? 70K, 70K. And then now we got the student loan and the mortgage. So let's go ahead and pay off that student loan, which is now right here at 34 months. So this is now 0, 34, 34. All right. So now we have 34 grand in the loan balance. Now, here's the thing. If there's a huge interest rate difference, like 3% loan and an 8% line of credit, you got to be a little bit careful. Okay. So one of the things you got to figure out is like, all right, if the cash flow index is really, really high, like a 30-year mortgage, and you're moving a 3% loan into 30%, 30-year mortgage into 8% line of credit, most likely what's going to happen is you're going to pay a lot more interest than you got to. This is why I talk about like first lien HELOCs, and they no good for most people, right? I got one person complaining in the comments like, "Well, I did a first lien HELOC, and I paid off my debts relatively quickly." And it's like, this person didn't have that much debt, right? But for the average person, and there was actually a gentleman who wrote in the comments like, "I really regret getting a first lien HELOC because this person had like a 2.875% mortgage," and I'm like, "Why'd you move that into a 10 or I don't know 8 to 10% HELOC?" Right? You don't get that much cash flow, right, for moving it. And so if the cash flow is huge, it's bigly, you don't really have to care that much of the interest rate like what we do with the auto loan. And there's really three things that determine the payment size, which is the original balance, the interest rate, and the term. In fact, if I take a look at this, right, you see this directly right here that you have a payment function and it just takes these three, but it's not just only the interest rate, okay? So my point is this, right? 30-year mortgages have the highest cash flow index. And if you move it into a line of credit and there's a huge interest rate difference, you're probably going to pay a lot more than you have to. Okay, as a general tendency. So let's just do this for now, but I'll tackle on the 30-year mortgage. So 6%, 8%, the difference isn't that great. So I'm comfortable moving into a line of credit. So let's go ahead and do this. And I'm just do Control V, and this is going to be plus 34850.91. All right. And then this is going to be 0, right? We get an extra $500 of cash flow in our life. And you know how so many people are like struggling with student loans. That's a funny joke, right? We're not going to do that. All right. So now our cash flow is 2772.47. Okay. And then let's see how long it takes us to pay off this student loan. Okay. So now it's going to take us 47 months. So 47 months to pay off the student loan, 47 months. And then this is going to be 70 plus 45K, which is 115,000. And then now it's time to tackle on the mortgage. So one of the things that I do want to show, and this is what is it, 47? I don't even know. 47 months. 47 months, okay? So I'm just going to do this right here. So 220,000, 220,000. So we have this velocity banking calculator right here. And one of the things I actually want to show is what happens when we pay off a 30-year mortgage with a line of credit and we transfer the whole thing, okay? So this is going to be 927.53. And what's our income? Our income is 5,700, and our expenses is everything except for the loan we're trying to pay off, so just $2,000. Okay. Now, let's do this. Let's say, ho, I looked at a velocity banking video and they say loans bad, line of credit good. So I'm going to move my 3% loan into 8% line of credit, all of it. Okay, that's what this means. Okay, look it up. I paid this off in 6.4 years. And you might be thinking, hey, that's pretty good. I paid this off and I saved about 51 grand in interest, right? And a lot of people, for some reason, they don't even have access to this calculator. They think they know how it works. Folks, this calculator is so smart that when you just move your loan into the line of credit, it knows that the payment is gone. Look, do you see the payment right here? It knows it's gone. Okay. That's how smart it is. Okay. And I didn't even create it. It's from Renatus, which I'll talk about soon. But if I do like a small chunk, 6000, and we move into line of credit, take a look at that. 19 grand of interest, 5.5 years. And you know, it pays off faster. So do you want to pay 16 grand, 60 grand or 19 grand, right? Which one do you want to do? And what's crazy, all right? This is the kicker, okay? This is the kicker. If you use a 30% credit card, it turns out better than the first lien HELOC. 30% credit card. Oh my goodness. I didn't even know that, right? I learned this from Renatus. So if you don't know what Renatus is, quick plug. This is a educational company that focuses on financial literacy, real estate investing. So I do resell their education. Click the Google form link below. And if you want to learn more about whatever, click it below and then I'll talk to you and we get you started. And you can give me the money, right? Because what am I really focused on is making the money because I actually need it. Now I actually don't. Because if I needed money, banks wouldn't lend it to me, and banks don't lend money to people who need it, right? Is that weird? Like sometimes, and I'll tell you why. Um, I kind of am perplexed because I brainwashed myself so much. People have gone to Zoom calls, on my Zoom calls, and they were like trying to trying to say, because when if you're ever on anybody's funnel, quote funnel, they always try to sell you something. Name a funnel where they don't try to sell you something, right? And then people were like, well, this must be some sort of a scam. And I'm like, You're just trying to make money off of me." And I'm like, bruh, what are you talking about? I just want people who are serious, right? And I only get the commission if I serve you. So if you don't feel like whatever I'm selling you is useful, then don't buy it. Like I don't pressure anybody to buy. I only want people who want to buy, right? And then so now you can make this little deposit increase a little bit more. And I know there are some people who hate this because they're like looking at this and like, well, why do you need more money, right? A lot of people like that. I can ask ChatGPT about that. And ChatGPT, because it's a psychological genius, understands human psychology, and you can make money without the approval of most people. You want to know the easiest way to get rich? I want to tell you something. Sell to rich people. Don't sell to poor people. Sell to rich people is like the ultimate hack. If you're poor right now, and this is actually advice for poor people. All right, so now let's go ahead and do this, and we're just gonna do a $6,000 chunk. So what does that the chunking thing mean? It just means that you're transferring a part of the loan into the line of credit, just a small part. So even if you use an 8% line of credit, I'm just gonna use a $6,000 chunk, right? This is what this means. $6,000 chunk plus $6,000 chunk, right? You see, it gets paid off in about 2-3 months, and you just do it again, and then you do it again, right? This is what chunking is. You just move it into the line of credit, small pieces, and you just do it over and over again. It's amazing. I didn't even know that, right? You know how hard people have of dumping all their money into a loan just because a loan is a one-way street. All right, well, let's use an 8% line of credit, make it easy for us just to dump all of our money into and take it out and then use it over and over again and pay it off quickly. And all right, 19 grand of interest. Whoop-de-doo. Okay. All right. Yeah. Do you think anybody would believe you if they told you? And again, this is like 5.5 years. 5.5 years. To me, that's a joke, right? Because I paid off mine in 2 years and 9 months, and I totally cannot relate with the average person. But even 5.5 years is a miracle for most people because they can't even what do you call it? Like they can't even pay off a 30-year mortgage in 30 years. All right, so 47 divided by 12 plus 5.5. All right, so 9.41 years. Well, not 0.41, 9.41 years. We are debt free, debt free. Oh my goodness. Okay, 0. And so now, how much is that? This is going to be 115 plus 220. All right, so 220. This is 231K of debt free, debt free. Okay, debt free, debt free. $231,000. You know how like in a lot of what you call it, velocity banking presentations are like pay off your mortgage in 7 to 10 years. No, 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 no. Pay off all of your debt in 7 to 10 years, right? Mortgage in this case 5. In my own case, 2 point 2 point whatever, 2 years and 9 months, right? And this is me as the goat of velocity banking. And by the way, if you want to know how to buy real estate right, you got to buy it at a discount, right? I bought it at the peak of 2022, and this is my other house. This is my other house. This isn't my primary residence, my other house. I bought it at $100,000 discount. That's what you got to do too. You got to buy it at $100,000 discount. Okay. All right. Well, that's it, folks. So this is Korean Atlanta Mentorship. If you want to join my cult, oh, did I say that out loud? If you want to learn more about this stuff, go ahead and click the Google form link below, and I'll see you all in the next video. All right. That's Korean Atlanta Mentorship. Let me say that 10 times. Korean Atlanta Mentorship. 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 I think I said it 10 times. Are you sick of me now? Korean Atlanta Mentorship. Have a great day, everybody.